This is the 11th TD Ameritrade portfolio update. This week we are sitting at $4,565.51, down quite a bit from the last video, so we need to go over a lot of stuff. First, we're going to start out here. You can see a lot of updates to the spreadsheet here, and we are currently down $203.53, or 4.27%. We are, let's go over here. We are beating the S&P 500 again, which is really great. Finally beating the S&P 500 again. But you can see we're down quite a lot since the last video, and the reason for that is because the S&P 500 is down quite a bit this week. If I go back 5 days, you can see the S&P 500 is down 2.37% for the week, which is quite a lot. And of course, most of our portfolio is invested into JEPI, which for the past week is down 1.5%. Obviously, it's less volatile. However, if we go to my positions, you can see that JEPI is about $3,400 of my portfolio. So while it might not seem like a lot, 1.5% of over $3,000 is over $45 in losses on JEPI, which is quite a lot. So the good thing is that a lot of the losses we took this week were pretty much all due to our JEPI position. Basically, none were due to selling spreads, which I was still doing this week. There's a lot to go over when it comes to spreads, so let's start with that. So, and in fact, let's start with that on the transaction history. So, first things first, we had all these options expire worthless last week. 4 of them, so Full Iron Condor expired worthless last week, which is great. You can see we opened an Iron Condor here on, I want to say that's Monday. So we opened an Iron Condor on the 21st. Of course, we bought our JEPI. And you see here, we ended up buying back our monthly spread. So we closed our monthly spread for full profit. As you can see here, $22 overall. In premium was captured on a total of $23. So we opened for $23 and we bought back for $1. So we made basically full profit on this monthly SPY spread, which is huge. $22 is a lot of money, which is, I'm just very happy about that. So we were able to close that for a full profit this week. And if we go back here, bought some more JEPI, and we ended up buying back. And this is really hard to I'm trying to figure out what thing is what. But if I do remember correctly, I ended up buying back the put side of the Iron Condor that I sold initially for a loss. So if we go, you'll see here, I took my first loss on, I want to say Thursday of this week. So we sold this Iron Condor first, and something to note is that when both of these Iron Condors, I broke multiple of my rules. That's always how it goes. And that, of course, led me to lose money, which is always, that's always how it ends up working out. Is if you ever break your rules, you do end up losing money, which makes sense. So I sold this Iron Condor knowing that there was an FOMC minutes meeting between the open and the expiration of this Iron Condor. So I knew there was going to be a huge economic event, and for some reason I still opened it. And by the time that event rolled around, I didn't feel confident with holding the put side through the event, so I bought back the put side and I held the call side open. You can see the call side expired worthless, while the put side I bought back for a $10 loss, and I initially opened this Iron Condor for a $12 credit, which means I ended this Iron Condor for the week at a $2 gain overall, which is still good. It's still profit. However, I ended up overtrading this week, and you can see, as I see here, broke a ton of rules. It was 1 DTE. There was even more economic news, and it was really bad. It was kind of like an emotional sort of frustration trade. I saw that I lost this, and I immediately wanted to jump back into another trade to try and make up for that loss, and I ended up losing even more. So I did a really bad trade here, and you can see once more I bought back the put side at a full loss. So I initially opened this Iron Condor at an $11 premium, and I ended up losing all of that on the put side. I let the call side expire worthless, but you can see, as you know in my rules, if the value of the Iron Condor doubles what the initial premium was on either side, then I force myself to close the position. just as like a risk management thing. And as you can see, I did end up doing that, and we ended up taking an $11 loss here. Like I said, broke quite a few rules on this one, which I'm very unhappy about. Like for example, we broke this, we broke this, we broke this, and yeah, we did at least follow the closure rule, which is good. But what's even more frustrating about this is that both of these iron condors that I opened would have expired completely worthless had I just not touched them at all. You can see SPY closed at 396 on Friday, and the lower end of these strikes was 389 and 391. So had I just held these till expiration, both of them would have expired worthless, and I would have made the full premium, which would have been $12 and $11 on both of these. So it is a frustrating loss, of course, but you know, there's no point in getting upset over it. What I'm going to do is just next week get back to it. I took a break from trading stuff after I took these 2 losses because I was still pretty emotional about my trading, so I decided to take a break. Moving forward from that, let's see here. So yeah, you can see all of that going down. Bought more JEPI. Here's the second iron condor being opened. Bought more JEPI. Here's that put side leg being closed. And then all of the call legs got expired today. So yeah, we go back here. You can see 3D Systems is still open. Google is still open. These are at a pretty big loss, but I don't really mind having these, so I'm just going to let them run. So I'm just going to hold on to these forever. JEPI at an overall loss of 60. If I look on my spreadsheet, it seems as though JEPI is down 46. I'm not sure what's up with TD Ameritrade because I'm pretty sure my calculation is correct. So we're down overall 46, but we got a huge dividend payout coming, so I'm not really that worried. Go back here. SPY, you can see my open P&L on this. If I go back to options, open P&L is $10. This is the 2 new monthly spreads I opened. So I opened 2 new monthly spreads on SPY, which as you can see are at the 436 and oops, okay, well, I messed one of these up in terms of strike prices because this is not correct, but I'm actually going to open TradingView here and show you. But yeah, so I opened a put credit spread expiring in a month, and I believe, yeah, this is also incorrect, so ignore that, ignore that. I opened a put credit spread as well as a call credit spread. The reason why it doesn't say iron condors is because I opened them on different days, as you can see here. So I didn't lump them together as an iron condor, even though they basically are an iron condor. They have the same expiration. But here are the P&L charts for these. As you can see, these have a very high chance of expiring totally worthless. I mean, 95% plus chance of expiring worthless. And you can see that overall we captured a credit of $35, which is huge. That is a ton of money to make on only $200 in collateral. Also, I believe TradingView is opened here. Let's take a look. Yep, here we are on the S&P 500. And if we take a look here on my chart, these 2 green lines are the legs of the iron condor. So this is the call side, this is the put side, and this is the current price of SPY is right here in the middle, and this is the expiration date. And so yeah, I'm very confident in this spread expiring totally worthless. You can see there's tons of supports and tons of resistance lines that I've drawn on here between the current price and the top and bottom of this iron condor, so I have full confidence that this will expire entirely worthless. So we're just going to let that run. Of course, like I said, we're down on it a little bit now, and the reason for that is because theta decay is not quite kicked in on these spreads yet. It'll take probably about a week or 2 before theta decay really starts to eat away at these spreads. So until then, we're probably going to have a little bit, a small open loss here, but I'm totally fine with that because I know in the end, unless SPY moves up 6% in a month or moves down 8% in a month, then we will end up capturing the full credit. So we got a ton of money coming in there. And yeah, so let's see if there's anything else here. I don't think there is. Here's what the month is looking like for everything. So overall for the month we've captured about $45 in dividends and premiums and income, selling options and collecting dividends, which is pretty good. It doesn't quite meet our goal, which would be about $90, and the reason for that is the JEPI dividend was very lacking, and also we're still learning how to trade spreads. So yeah, not too worried about that. If we look at the income calendar, let's take a look at that. If you remember, I said we would probably go green by March 5th. It's not looking like that anymore, sadly, because the market is going into another downturn. Had we not had this big downturn here, I would still be very confident of it going green on March 5th, but hold up, I need to pull up my tools here. You can see this. So for like the past week, market's down quite big. And because of that downturn, my JEPI position has been losing quite a bit of value. And so as a result, I will no longer probably be going green on March 5th. But I'm not too worried about that. You can see JEPI's dropped by quite a bit. But I mean, our income calendar here, you see that we will still receive $110 in dividends in the next week, which is huge. That'll push our profit and loss all the way up to $93 in losses, which is a lot less than it currently is. It'll also allow us to beat the S&P by a lot more. And then I laid out a sort of brief overview of what the payouts will look like for the month of March. And if we were to add all of this together, you can see we would eventually go green by the end of March. So, assuming we stay in this downtrend, it might be some time before I go green. You know, it could be the end of March. If we bounce off of this line that I was showing you a minute ago, let me go back to this on the S&P. If we make a comeback on this line and we continue our uptrend, then I will be confident that we will be going green by March 5th again. But it's not looking like that. It's looking like the market might go down, bounce, kind of trade sideways for a little bit on a down sort of overall trend. So we'll see how that goes. But yeah, probably not going to go green by March 5th, but we'll at least be a lot less in the red by March 5th when Ford pays its $80 dividend and JEPI pays its $30 dividend in early March. But yeah, so that is the portfolio for the week, and I will see you in next week's video.